The great political question of our time is whether the GOP, the Republican Party, can get the United States' fiscal house in order. That's what it campaigned on. Now, in the GOP mindset, Ronald Reagan's presidency is often held up as the shining economic example that transitioned this country away from the malaise of the Carter years to the booming 1980s and 90s, and that this is what we should all be trying to do. Well, Ronald Reagan's first budget director was a 34-year-old congressman from Michigan named David Stockman. Stockman left politics 25 years ago, but he is so worried about where we're headed, he has re-entered the national debate. David Stockman joins me now. Welcome.
Great to be here.
So tell me what the economy looks like, first of all. You spend a lot of time looking at these kind of things. When you look at the data, what does the American economy look like now?
I think it's very weak, and I think we're not in any kind of conventional recovery. This isn't just a business cycle. I think we've been through a 30-year binge, if I can use that word, of massive debt creation, both in the public and the household sector. We have had a Fed that's totally changed policy and has become very easy and run the printing press year after year, fueling this enormous current account deficit that we've had. We've basically run $8 trillion worth of deficits with the rest of the world. That is, we're living beyond our means by that extent. And it's cumulatively built up into all kinds of weaknesses in our economy. And so today, we're having a hard time recovering from the big recession that we went through over the last 2 years. And I think this is going to be par for the course, the new normal. Economic growth will be weak as we try to unwind this massive spree that we unfortunately indulged in and reduce the debt on the household sector and on the public sector at some point.
So you're talking about a number of years of fairly poor growth, probably much worse than the current projections.
Yes, I think that's right, and we've never faced that before, because for 40 or 50 years, this baby boom generation has always believed that things will get better and better, and they did, and that when we ran into recessions that we could spend our way and borrow our way out of it. Well, we did 3 or 4 or 5 times. But I think when we got to 2008, we were at the end of the road. We had $50 trillion of debt on the public and private sector combined in this economy. We had what would be called a leverage ratio that never before had been seen in history, even during the Great Depression of the 1930s. So we were at a break point. And as a result of that, we're now in an environment where it may take 10 years of very little growth, of difficult struggle to rebalance our economy and bring it back to sustainable health. So we're in a real bind, and I think the budget projections ignore that, and therefore they're way too optimistic.
The Fed and the White House and Congress are all projecting growth rates for next year and the year after that you think are essentially impossible to achieve.
Yes, they're projecting that soon, within a year or two, we'll be back up to 3 or 4% growth. Over the next 5 years, the unemployment rate will come down from 10, or even more if you measure it correctly, where it is today, to 5. That will create 13 million new jobs over the next 5 years, or about 250,000 a month, when since the recession ended in June of 2009, we've barely created 50,000 a month. So the prospect that that is likely to happen, I think, is quite remote. And so therefore, if you recalculate the budget with a realistic level of unemployment, and therefore more unemployment spending, more food stamp costs, more safety net costs, and less revenue, the budget deficit will be $100 billion a month as far as the eye can see, and our economy's growing at $50 billion a month at best. So we have a national debt that's growing at twice the rate of our economy, and we have total stalemate in the political process in Washington, as we saw last week in response to the proposal, which I think was pretty constructive, of the 2 co-chairmen. It was dead on arrival.
Explain that, because you are, you're not just a policy wonk, right. You were a congressman. Right. You were a congressman from Michigan, right. Which is a tough place to be a congressman from.
Well, we have gone now 30 years with each side sort of digging into their favorite political zone of defense. So now we have the 2 parties dug in, no spending cuts from the Democratic side, no revenue increases, and in fact, tax cuts from the Republican side, and our system is broken. It is ungovernable fiscally, and at one point or another down the road, the world financial markets, the bond markets, the currency markets are going to figure this out. They're going to figure out that today, this crazy QE2 that we have from the Fed is really a disguised form of monetization. Each month, the Fed is going to be buying $100 billion worth of new Treasury debt. Each month, the Treasury is going to be issuing $100 billion to fund this huge gap. Well, that means that we're just printing money. We're literally printing money to pay the government's bills, and there's no case in history where that's worked for very long.
You say that you are, as an investor, will buy everything that Ben Bernanke cannot destroy.
Yes.
What do you mean? Explain.
Well, I said I would buy gold. Maybe I would buy bottled water, canned beans, and some flashlight batteries. It was kind of a statement to say there's a lot of worry about this, and it's not entirely flippant. I think the Federal Reserve is under attack from every corner of the globe, and it should be. From Ron Paul on the right, and he's right, to the Chinese communist leaders who learned their economics from the Little Red Book. And even they can see that printing money in this reckless way, in this magnitude, in an economy where there's too much debt already and the interest rate is zero, what sense does that make?
So paint the scenario you worry about. Not even, and not a worst-case scenario, but a realistic scenario where presumably you feel at some point world markets, world investors will say, wait a minute, can we really rely on the United States to fulfill all these obligations?
Yes, the worry I have is that we're drifting down the road to a global monetary conflagration, where this enormous flow of new dollars into the world market creates a huge reaction, and you're seeing it already. Brazil is denouncing it, printing press money, the Chinese, the Germans. So we're running into a dead end here pretty quick. And if a sell-off in the global U.S. government bond market ever gets underway, it'll be, traumatic. It will be a real Armageddon situation. There's $9 trillion out there of U.S. government bonds and bills and notes. And if the world market loses confidence and a sell-off begins, it will really be a traumatic moment.
It will mean that the only way to maintain the system is that the United States, the Federal Reserve, will have to raise interest rates very high, which will then choke off what little growth we have. Right?
Exactly right. Exactly right. They're playing a very dangerous game at the Fed, and they're playing an even more dangerous game in Washington. By pretending that, well, the economy is weak. Yes, it is, but it's going to stay weak. And therefore, they're saying, let's wait 2 years and do something. Well, when your credit card is taken away, you don't really tell the credit card company, give me 2 years to see if I can find a couple more jobs so I can pay back my default. So and this is where we are right now as a nation. We don't have 2 years to wait till see if the economy gets a little better before we start making the tough choices to cut spending, defense, Social Security, discretionary spending, and raise taxes. I think it's silly that they're thinking about extending the tax cuts for the richest 2% of Americans in light of the circumstance that we're in. I'm just shocked that Obama wouldn't have the fortitude, wouldn't have the insight to realize he has to stare down Congress and say, no, I'm drawing the line in the sand, send me a bill that extends tax cuts for billionaires and I will veto it. And yet, what do you hear? Well, maybe we'll compromise and extend them for a couple years. Unless we get some leadership out of the White House, this situation is going to go from bad to worse very quickly.
We will be back right after this. When we come back, David Stockman will explain his solutions to some of these problems and the politics of it. Why is it that his party, the Republican Party, is unwilling to do what it takes to get the economy back in shape? When we come back.
This isn't about growth. This isn't about morning America in 1980. This is about solvency. This is about cleaning up the mess the morning after from a 30-year binge that wasn't sustainable, as we've learned.